Welcome to this short video series Asking the Experts. When moving to France or even living in France, we often start with the exciting challenge of finding our property before we even get down to thinking of visas and paperwork. And that is completely normal. More often than not, your research leads you to more questions and it becomes frustrating, especially not knowing if you can trust the information that you find. That is the real reason I decided to create this short video series. It's really to give you answers and clarity to those important questions. But for those of you that don't know me, my name is Tracy Linetti. I'm a paperwork professional and I've lived in the south of France for almost 35 years now. When I came to France all those years ago, I struggled with the paperwork and there was no one there to help me. And that is why I created LBS in 2012 because I wanted to help people like yourselves live the best life with serenity. But today's not about LBS, it's about trying to get help answering your questions concerning mortgages and the support you can get with your financials. Let's face it, money is often a sensitive subject, especially when working on your budget for the relocation. And sometimes it's just good sense to look at your finance elsewhere than in your own pocket. Then, of course, it's down to your understanding of those options. Well, today I'm so happy because I have the pleasure of introducing you to Sharon Revol. She is the head of Cafpi International and she's going to answer some of your key questions today. Sharon, thank you so much for being with me here today and for accepting my invitation. Now, I've got some questions lined up for you, Sharon. People ask me these questions all the time about mortgages. So I really thought it's a really good idea to have you on board here today. Maybe we could just kickstart this off by you telling us a little bit about who you are, what you do, and what your role is as a mortgage expert.
Of course, thank you, Tracy, and thank you very much for inviting me along. Hopefully, I'll be able to give you some insight into French mortgages. So, I'm a French mortgage broker. I've been a French mortgage broker for 22 years, in my 23rd year, specifically arranging mortgages for non-resident and expats purchasing property in France, although we do sometimes arrange mortgages for people purchasing properties in Europe as well. My role as a French mortgage broker is to facilitate the mortgage process, the purchase process for people who are buying in France. Obviously, mortgage finance is available to non-residents and expat buyers, but it's all a bit of a mystery. So my job is to take the mystery out of all of that. I look after a team of 15 dedicated mortgage brokers within Cafpi. Cafpi are a nationwide firm with a national coverage, but we're a specialized team used to dealing with expat and non-resident customers, as I said. Basically, we hold the hands of our clients throughout the process. We pre-qualify you so that you know exactly how much mortgage you can borrow and at what conditions, how much it's going to cost you, and more importantly, we are whole of market. So we're able to compare the local market, the national market, specialized banks, and banks outside of France as well. So we're able to really understand your situation, make it fit within French banks. We kind of translate all of the international, how your tax returns, how your income, everybody's situation is different. And our job is to translate that into an easy to understand mortgage application for a bank so that they accept your mortgage and you're able to buy your dream home or investment. So it's really quite simple. We're there to facilitate the financial process of buying a French property.
Oh, that's fabulous. And I love the idea of saying, demystify and the hand holding because, most of my clients, obviously, they're coming from overseas, so they're non-residents for the majority of people looking for mortgage advice. And they really just do not understand it. It's very complicated. So I guess one of the questions that I get asked a lot, and if you can demystify, would be what is the key criteria for somebody who's wanting to get mortgage advice coming to France?
The key criteria is, well, first of all, I would advise starting early on in the process, speak to a mortgage broker before you come and visit, because the criteria here is based on affordability criteria,
Mm.
amongst other things. But the banks actually have a legal responsibility to lend responsibly, and make sure that people aren't paying too much in debt-related outgoings, i.e., they're not getting themselves into too much debt on a monthly basis. So the banks here have to look at your taxable income and they have to look at your global debt-related outgoings, but that can be things like rent that you pay, existing mortgages, car loans, how much your mortgage could cost when you come to the end of your fixed term period as well, but things like credit card, minimum credit card payments, etc. And every bank has a slightly different interpretation of the rules in France. They have their own rules, which they apply to the rules. Um, and demystifying that process is helping you understand exactly how much you can borrow before you start visiting so that you don't visit the dream property and then find out you can't afford it. Or maybe you can afford a bit of a bigger property than you thought you could
Mm,
because of the difference between bank criteria. If you speak directly, say, to a bank and they give you an indication as to how much you can borrow based on their criteria, maybe they were the least flexible bank on the market because there can be a big difference with some of the banks that we work with that and literally can mean a couple of 100,000 euros difference in terms of budget. But yet it's the same criteria that they will explain to you when you meet with them. So
mm,
we take the mystery out of that and are able to tell you how much you can borrow across the board and with which different mortgage products, what the possibilities would be. So there's understanding how much you can borrow, but there's also understanding how the French mortgage process works. An example is in the UK, for example, people can buy a property, they renovate it, maybe they get a renovation loan, but the bank just puts the money into their account and they renovate it as they see fit and they kind of go along. And then they refinance at the end of the purchase, at the end of the process. Um, and when people understand that they can't do that in France, they're quite surprised and they said, "Oh, I wish I'd bought with a mortgage to start off with, and rather I've used all of my cash. Now, what am I going to do?" So you can't remortgage to release equity in France. So understanding how French mortgages work is very important when you're planning as well, because there are really big differences. We don't do income multiples here in the same way as the UK or the US.
mm,
Our mortgages tend to be fixed term. We keep for fixed rate for the duration of the term. We keep them for the lifetime unless there's a huge drop in interest rates. So it's really helping you understand all of the major differences between the country where you live and
mm.
the country where you want to buy the property, which is obviously in France.
Yeah, and this is it, isn't it? Really, the differences are quite big differences, like this remortgaging that you have in the UK that you cannot do in France. We know it's a completely different way of going about it, and so that's great that you're explaining that. And so you're kind of the interface. You do all the work with you, you do all the file, and then you're the interface to find the right bank at the right price with the right lending amount. So you're really the one-stop shop for the mortgage, really. Which is, I love that.
Um, yeah, absolutely. And we take all the hassle out of the process because we don't have credit reports in France. So a bank can't just go onto their computer system and say, "Oh, yes, you've paid, you've got a good credit history, we're going to lend to you." And because they have that legal responsibility to check that you can afford the mortgage, they're going to ask you for a lot of paperwork. An ill-prepared application, I mean, lots of going backwards and forth with the bank, unless you don't declare everything to us when we find out things as we go along.
Mm,
Um, but by putting together a mortgage application and presenting a clear application to a bank, it means that there's less hassle for you and that it will be a smoother process. And obviously, we're here to help you understand what is happening in the process and translate it into terms that you can understand as well. We also, when there are meetings with the banks, because sometimes the banks like to meet their customers on Teams calls, etc., we attend them with you, so nothing gets lost in translation, or if there's any questions that you're not sure of, or yeah, sometimes things get lost in translation, so we're there to help. And when I say kind of hold your hand every step of the way,
mm,
it's really important because we're used to dealing with non-resident customers. So we understand the differences. And a French bank might just think everybody knows that you can't do something, so won't even think to tell you,
mm,
where we will actually point out the things that you don't know. But we feel that you need to know to be able to better understand and appreciate the situation to make sure that you get the right finance from the beginning. Because if the only way to put finance on your property afterwards is to sell it, then obviously that's really bad for you. And it's going to cost you a lot more if you have to pay notary fees, etc., when you have to buy another property with a mortgage.
mm.
Um,
Yeah, and it's like I was saying at the beginning earlier, that organizing finance is important. And sometimes, why use your cash when you don't need to? Because you can't remortgage. So that's a
Mm.
big question that comes up. So I'm glad we've looked at that. I mean,
There is one thing, Tracy, which is why use your cash when you can mortgage? Actually, that's
yeah,
a very good point because actually sometimes it can put you in a better position to be a cash buyer. Um, and it means that you can secure a property easier
easier,
as a
quicker, isn't it?
non-resident
Yeah,
when you're a cash buyer.
yeah.
But there is a little loophole where you can put a mortgage on it in the 6 months after purchasing it. That's the only time. It's called a post-finance mortgage. And it's the only time when you can actually do that. Not all of the banks will do it, but we have banks for non-residents that will do it. And it means that the non-resident buyer, I'm doing one at the moment for a property in Nice, the non-resident buyer put in an offer, cash, which meant he was able to secure the property. Um, as a non-resident, he presented more risk to the vendors who were very French. They were like, ooh, maybe it's not a good idea to sell to him. We don't know if he's going to go through. But the fact that he was a cash buyer meant that he was able to secure the property, take it off the market. We started applying for the mortgage. So he didn't have a mortgage clause in his contract, which
Okay,
put him
yeah.
in a better position. We've started applying for the mortgage. He's completing next week, and his mortgage will complete the month after. So yes, he's putting the cash into the property, but because we're completing on the 6 months after the purchase, he's using the leverage of a mortgage. And he was very clever and negotiated with, I don't know, his investment bank or wherever his savings were, that he could put the cash back into the bank without any penalty from taking it out of his investment.
That's amazing. I didn't even know
Mm.
that's amazing. Now that is a good solution to a lot of people because people, like you say, the cash, when you've got cash on the table, it helps from securing the property. But if there's a possibility, maybe not for everybody, but it's nice to know that's on the table. And I'm a paperwork guru. I mean, that's what we do. So obviously I heard the paperwork word as in, prepare the file. There's a lot of paperwork. So can you give us a little bit of an idea of what type of paperwork our clients might be potentially looking at without scaring them off?
Realistically, I like to be very realistic with people.
Yeah,
And my clients sometimes say, I feel like we've provided you with every single piece of information about my life, Sharon.
I had a feeling it was going to be that, yes.
And to be honest, it's not too far from the truth. But if we break it down into what the banks actually need, you'll understand why. Because first of all, they need to understand who you are. So, like when you open up any bank account or when you enter into a relationship with a new bank, they need to know your customer because of financial regulations, etc. So that's things like your ID, your marriage certificate. Some banks might ask for your Experian report, a second form of ID. Some banks ask for a bank reference letter. We will tell you exactly what you need based on each bank. But so everything, a utility bill under 3 months old. Then they need to know, well, we know who you are. How much do you earn? Like, where does your income come from? So what's that going to be? Employment contract, last 3 months payslips, last 3 years tax returns or P60s or W2s. Um, you have rental income, so the rental income contracts, the
Mm.
bank accounts where they can see all of this, so the last 3 months bank accounts for all of your bank accounts. Then they will want to know what debt related outgoings you have. So that will be things like your mortgage offer, how much you have outstanding, so an updated mortgage statement, your last 3 months credit card statements, your lease agreements, if you rent, your rental agreement, what other things can you have? Car loans, so any
Car
personal
loans, yeah,
finances,
basically all your outgoings and all your
all of
income.
your outgoings, your debt-related outgoings, they need to see those. Then you're going to have a personal contribution to the property. So the estate agents have and the notary have a liability as well to check where your money is going to come from because of money laundering, etc. So they have to check what we call in French le provenance des fonds. Where is the money coming from? The banks have to check that you're not taking out another loan to finance your personal
Mm,
deposit because
yeah.
if you were, they have to make sure that they take into account into the affordability. So we're going to ask for all of your the statements relating to your assets. If on any of your bank statements we see that there's another bank account, well, we have to check that bank account as well to make sure that there's no more debt, and then so on and so forth. So you can see how we get
Mm.
into a circle
A
of
file
moving
that's
along.
this deep, basically.
Yeah.
Yes.
Some of our applications can be like a whole box of A4 paper. Thankfully, we don't print them out anymore, but you can
Well,
imagine.
yeah, exactly. I say that when we deal with perfecto files, I'm like, sometimes we turn a perfecto with a pile like this. It's like we've killed a couple of trees to come here today. But so yeah, hopefully most of it is online now, so it's not so bad.
Yeah.
Yeah, I mean, having been through the process a few times myself, I know there's a lot of paperwork involved, but that's why you are there for. That's why we're there for. It's to really help hold hands with that paperwork and make sure everything's there. So that's fabulous. One question that comes up a lot is there a minimum lending amount? Like, can somebody lend, 50,000 or 100,000? What is the minimum amount we can lend? Or is it really based on that ratio that you work out?
The minimum mortgage amount in France is actually very low. It's like 22,000 euros.
Ah,
However, we have the Banque de France sets something called the usury rate, which is the taux d'usure, which is the maximum the annual percentage rate of charge can be on a mortgage. So it's the taux d'usure basically sets what the maximum, the APRC, or in French we call it the TAEG, can be on a mortgage.
mm,
That's calculated by the nominal rate of interest, i.e., the interest rate that you're charged on a mortgage, plus all of the additional costs such as life insurance, lenders' arrangement fees, the cost of registering a legal charge, etc. And when you take the overall cost of the mortgage and you convert it back as a percentage against the amount borrowed, it gives you the TAEG, so the APRC. When you have a lower mortgage amount, your TAEG is going to be automatically higher than on a higher mortgage amount.
mm,
And when we were in a period recently, since about 2022, 2023, when interest rates rose quite quickly in France, the TAEG was still quite, the taux d'usure was still quite low. And it meant that it's going to sound awful, I'm going to say, but as you get older, life insurance becomes more expensive. So it meant that on smaller mortgages, for older people, like myself, I wouldn't have been able to get a mortgage of 50,000 because my life insurance would have represented too much of a percentage.
yeah.
And therefore, quite a few banks started putting minimum amounts of 150,000, 200,000, etc. But also because it was more financially worthwhile, they spend the same amount of time on a small mortgage as on a big mortgage. So that's technically why it did become quite hard to get smaller mortgages. We frequently arrange mortgages between the 70,000 and 100,000 mark because we're kind of coming out of that category where the banks can't lend because they're hitting the usury rate. Because if they hit the usury rate, they legally can't lend. So it's quite technical. I'm trying not to go into too much detail, but there is a technical reason that exists why it's difficult at the moment to get a small mortgage. But it will depend on your age, um, on your health, and the actual mortgage amount. So there could be a difference if they're saying yes to 65,000 but no to 60,000. And it could be that your neighbour is okay for 60,000, and you're a year older and you're not. So it's a bit
Yeah.
complicated, but
Yeah.
it is something that we can look at for customers, and we do frequently. We don't have like a minimum. We won't say to you, well, if your mortgage is less than 100,000, don't bother
Yeah.
coming to us.
Oh, that's good to know because there was a time when it was getting that way. Like you said, it was like some people's like it was 150,000. Some people don't, obviously, a lot of people don't need that amount of money when they're coming across. Sometimes it's just to
Yeah,
mitigate using all of the cash. Um,
yeah.
and actually you actually touched on a point there that is important is the age.
Mm.
A lot of my clients coming over are at the kind of early retirement age, so kind of the 55-year-olds and things like that. Would that be too late to get a mortgage? Or again, is it depends on their file and all the rest of it as well, but it's not too late or
No, it's not. We can do mortgages up to age 75. Sometimes we can go up to age 80. What we need to be really clear about as we approach retirement age is what's going to happen to your income during the time of the mortgage. So if we apply for a 20-year mortgage and the client's 55, 56, part of half of the mortgage is going to be when they're at retirement age. And I know some people say, oh, but I'm not going to retire. But the French don't want to know that you're not going to retire because legally you can retire. So they want to know what's going to happen when you reach the legal retirement age. in terms of your income, not that you're going to carry on working because you might change your mind, and that's hypothetical in the future. So, what's your income going to be in like 10 years' time? It may be better to take a 10-year mortgage
Mm.
or a 12-year mortgage because they won't worry too much if 2 years of your mortgage is after retirement age. In fact, I don't know how old the retirement age is in the UK or other countries anymore because it keeps
It's
changing. But
changed all the time, doesn't it? Who knows, to be quite honest.
so they will look, and obviously you don't have a crystal ball, but they will ask for if you want to take a longer mortgage, well, can you provide proof of in America they have the Social Security, and you can get a really good breakdown of what your Social Security is going to be per age. So that's very helpful as well for a mortgage application. So yeah, they can get a mortgage. It's just every
Okay.
file is going to be a little bit different.
Yeah.
And it depends on what your overall assets are as well. When you're 55, 60, they're going to be expecting you to have more assets and more savings, etc., and they'd be a little bit more comfortable than say a 30-year-old.
Mm.
Um, so they will do close scrutiny on your application as well.
Makes sense, absolutely makes sense. But it's nice to know there is a possibility. So that's fabulous. Sharon, first of all, I want to say thank you for spending time with me today because the questions you've been answering are absolutely amazing. Um, is there anything else you want to share with us? Any points you haven't mentioned that I haven't asked that are important for our listeners to hear? Or can I leave you in peace for the rest of the afternoon?
Tracy, I could talk about mortgages. Well, I do
I
talk
know.
about mortgages all day long. It's my job.
Yeah.
But no, I'm very happy to answer any questions. And if anybody has any questions, they can direct them to you, and I'd
Yeah.
be happy to answer them.
Wonderful. Well, thank you so, so much, Sharon, once again. And I'd just like to say, anybody watching this on the replay or on the YouTube channel, just reach out to myself. I will be sharing Sharon's details as well, but you can drop us an email or drop us a message. We'll make sure you get in touch with Sharon so she can really look more closely at your situation, answer your personal questions, and so you can get the support you need hand in hand, helping with the paperwork right through the whole process. And having known Sharon for quite a long time, I know she's a great person to work with, so don't hesitate. And so, with that, I'm going to leave you. I'm going to say, have a wonderful day, Sharon. Thank you once again for joining us.
Thank you.